Hi, and welcome to another episode of Inside CalSTRS Investments, a look at how teacher contributions are invested for the benefit of all of California's educators. I'm here today with CalSTRS Chief Investment Officer, Chris Ailman. Hi, Chris.
Hi, Mike. Great to be here again.
It's a new year, and an old year closes its books. So what was our performance for 2016?
Well, and I think it's important for the members and the public to realize that for us, we look at 1 year as the pace of a mile in a marathon. So I'd actually really focus in on our 20-year return, which was 7% over the last 20 years. So that includes the Great Recession and some pretty rough markets, but also some good markets in the 90s. Our 10-year return, not surprisingly, because you're starting from 06 up until 2016, is only about 5%. So you've got the recession really having a big impact on that. Our more recent return of the last 3 years is actually 9.7%. So that's ahead of the actual rate we want to get and looking pretty good. And in 2016, because I know a lot of people like to compare, our net return net of all costs was 8.1%.
Not bad considering we're trying to reach 7.
Correct. I mean, the goal over the past decade's been about 7.5. Now we've lowered it to 7.25 for this year, and then next year it's going to drop to 7%. We're not going to change the portfolio. We just think realizing, looking at the past and looking forward, it's going to be tough to make a 7.5% return, so the board lowered the expectations.
Is there a way for the public to compare results over time?
Great question, because I get that all the time about what do you do with a defined benefit portfolio. I would say the average member should really look at their 401k or 403b, and they probably see a target date fund, something like a 2045 or 2050, because we invest with the idea of a 30 to 35-year-old teacher in mind, somebody that's going to retire out there in 2045. If you use those as a reference portfolio, over the last 10 years, we just barely kept pace with them. And that's because we have longer term investments which don't do as well in those kind of recessions. But over the last 5 years, we've actually outpaced those portfolios and done very well because of our equity exposure and the growth of our long-term assets.
Well, what about a person like me who might be retiring the next 10 years and whose target date is actually maybe 2020 or 2025?
Well, if you have a target date of 2020 or 2025, first off, I can say congratulations, you've had a long career, so good luck. But also, those portfolios tend to be much more in fixed income and much less in growth. So they're going to have a lower return than we did because we are looking out 30 years. So we take advantage of long-term investments. And in fact, over the last 5 years, our private equity and our real estate investments have actually produced a double-digit return, over 10%. So a shorter-term portfolio, somebody retiring near-term isn't going to be able to have those kind of long-term investments. And that's why, with our horizon, we can outperform.
Okay, well, thanks so much for your time, Chris.
Thank you, Mike. Great to be here.
You've been watching Inside CalSTRS Investments. Thanks for watching.